Hi everyone, I hope you watch my channel to actually learn and develop your own investment philosophy, not just to follow what I say without thinking. I'm going to reveal something about SCHD that could completely transform your financial future, but I don't want you to just hear the name and immediately buy it. I want you to understand exactly why this strategy works so you can make your own informed decisions. What I'm seeing with SCHD right now is creating a massive wealth transfer that most people are completely missing. I'll show you the current market conditions that make SCHD perfect for 2025 and beyond. Explain the mathematical advantage most investors never discover, reveal why institutional money is flooding in, and give you my exact implementation strategy. This isn't just about one ETF, it's about understanding how to build generational wealth through intelligent dividend investing. The market rotation creating millionaires. Here's what's happening right now that creates a massive opportunity for smart investors. SCHD is currently trading at $27.32, and the economic environment is setting up perfectly for dividend-focused strategies. With Q3 GDP expected to slow to approximately 1.3%, and inflation still above the Fed's 2% target, smart money is rotating into defensive dividend-paying companies. But here's the part that gets me excited. SCHD has a current dividend yield of 3.79%, which is significantly higher than its historical averages. This means you're getting more income today than typical, while companies maintain the same rigorous quality standards that have driven long-term outperformance. The mathematical advantage is absolutely staggering. SCHD has delivered 12.30% average annual returns over 10 years, while providing steady income throughout. Compare this to savings accounts paying under 1% or bonds with significant interest rate risk. $100,000 invested in SCHD with monthly $1,000 contributions growing at historical rates becomes over $500,000 in just 8 years. But the real magic happens in years 15 to 20 when compound growth explodes exponentially. Why September 2025 is the perfect entry point. Current market conditions have created a unique opportunity window for SCHD investors. Year-to-date performance of 4.25% significantly trails growth stocks, creating relative value that institutional investors are recognizing and acting upon. The 52-week trading range of $23.87 to $29.72 shows SCHD at attractive levels compared to recent peaks. More importantly, the current economic uncertainty favors exactly the type of recession-resistant companies SCHD holds: healthcare, consumer staples, utilities, and established financials. Professional money managers are positioning for potential market volatility by increasing allocations to defensive dividend strategies. This institutional support provides a strong floor under SCHD, while the 3.79% yield offers meaningful income during uncertain times. The opportunity exists because retail investors are still chasing momentum and growth stocks, overlooking the mathematical advantage of quality dividend investing. The institutional money flow driving SCHD higher. Here's insider information about why SCHD attracts billions in institutional money. SCHD tracks the Dow Jones U.S. Dividend 100 Index, but the selection methodology is what makes institutions pay serious attention. Companies must have 10-plus consecutive years of dividend payments, plus pass rigorous financial screenings that eliminates weak companies. The four-factor selection process is incredibly sophisticated. Cash flow to total debt ratios ensure companies can actually afford their dividends. Return on equity metrics identify management teams that efficiently generate profits. Dividend yield requirements provide current income, and 5-year dividend growth rates provide sustainable business models. This means SCHD automatically owns higher quality companies than broad market indexes at only 0.06% expense ratio. Recent institutional inflows reflect professional recognition that dividend-focused strategies offer both reliable income and long-term wealth building potential. When pension funds and endowments allocate billions to a strategy, individual investors should definitely pay attention. SCHD versus SPY versus Triple Q, the ultimate performance analysis. Let me settle the debate about whether dividend investing can compete with growth investing by showing you the actual numbers. SCHD's 10-year average return of 12.30% puts it an elite company among other ETFs. And here's where SCHD becomes truly special. The downside protection during market crashes is incredible. In 2022, SCHD only dropped 3.23%, while broader markets fell 18% plus, and tech-heavy indexes crashed over 30%. SCHD was paying dividends the entire time, so total losses were minimal for investors who held through the volatility. This defensive characteristic means SCHD delivers better risk-adjusted returns than pure growth strategies. You get meaningful upside participation during bull markets, plus significant downside protection during crashes. The mathematical advantage compounds over time. Growth stocks that crash 50% need 100% gains just to break even, while SCHD's smaller drawdowns mean less recovery time and more consistent wealth building. The dividend growth explosion most people miss. Here's the wealth building secret that transforms everything. SCHD's power isn't just the current 3.79% yield, it's the dividend growth that creates exponential wealth over decades that most investors never fully understand. Quality companies typically increase dividends 5 to 8% annually, meaning your yield on original cost grows every year. Invest $50,000 today, earning 3.79% initially. After 10 years, your yield on cost could be 6 to 7%. After 20 years, potentially 10% plus yield on your original investment. But here's where it gets explosive. If you're reinvesting those growing dividends, you create compound growth on top of compound growth. Not only do your dividends increase, but you own more shares generating those increasing dividends. Real example, $25,000 initial investment with $500 monthly additions grows exponentially as dividends increase and share count multiplies year after year. The tax optimization strategy that changes everything. Most investors completely miss the tax advantages that make SCHD perfect for wealth building. Qualified dividends receive favorable tax treatment, typically 15% instead of ordinary income rates up to 37%. This tax efficiency becomes massive over time. $10,000 in annual dividends taxed at 15% instead of 24% saves $900 yearly. Over 20 years, that's $18,000 in tax savings just from choosing dividend investing over bonds or savings accounts. But the real magic happens in tax-advantaged accounts. In Roth IRAs, SCHD's dividend growth compounds completely tax-free forever. Imagine earning 3.79% today, growing to 8 to 10% yield on cost over 20 years, all tax-free. My optimization strategy: hold SCHD in taxable accounts for current income and tax-efficient growth, plus hold SCHD in Roth IRAs for explosive long-term compounding. This dual approach maximizes both current income and future wealth. Why October 2025 could be SCHD's breakout month. Multiple factors are converging to make fall 2025 exponentially explosive for SCHD. First, the Federal Reserve's interest rate policy is creating favorable conditions for dividend-paying stocks. Second, institutional portfolio rebalancing typically occurs in Q4, potentially driving additional inflows into defensive dividend strategies. Third, tax law selling of growth stocks could create rotational opportunities into value and dividend investments. The economic environment increasingly favors SCHD's defensive characteristics, as investors may finally recognize that steady dividend income plus capital appreciation beats pure speculation. Current market sentiment remains focused on AI and growth stocks, creating relative value in quality dividend payers. This sentiment gap creates a massive opportunity for investors who recognize mathematical advantages over emotional market narratives. The recession-proof wealth-building strategy. Here's my advanced approach for using SCHD as both recession, insurance, and wealth amplifier. SCHD's companies aren't just dividend payers. They're economic necessities that people need regardless of economic conditions. Healthcare companies providing essential medications, consumer staples selling food and household products, utilities providing power, and established financial companies managing money. These businesses generate reliable cash flows during all economic cycles. During the 2008 financial crisis, many SCHD-type companies maintained or even increased dividends while growth stocks crashed. This defensive positioning protects wealth during downturns while providing steady income. My recession-proof allocation: 35% SCHD for income and stability, 30% broad market diversification, 25% selective growth opportunities, 10% international exposure. The mathematical advantage that creates generational wealth. Let me show you the compound interest explosion that most investors never calculate correctly. SCHD's advantage isn't just current income. It's the mathematical certainty of growing dividend payments over decades. Starting scenario, $75,000 investment, earning 3.79% initially. Companies increase dividends 6% annually on average. After 10 years, yield on cost becomes 6.8%. After 20 years, potentially 12.2% yield on original investment. Add dividend reinvestment. Those growing dividends automatically purchase more shares, creating exponential compound growth. The explosion happens around the year 15 to 20 when annual dividend income begins exceeding your original investment amount. By year 25, total accumulated dividends could be 3 to 4 times your initial investment while you still own all the shares. This mathematical advantage explains why Warren Buffett, universities, and pension funds focus on dividend-growing companies for long-term wealth building. Your October action plan for maximum wealth building. Here's your specific implementation strategy to maximize SCHD's potential right now. First, determine your optimal allocation based on age and risk tolerance. Conservative investors might allocate 40 to 50%, aggressive investors 20 to 30% as their defensive core holding. Second, choose the right account types strategically. Use taxable accounts for current income needs, Roth IRAs for long-term wealth explosion, traditional accounts for immediate tax deductions. Third, implement systematic investing through automatic monthly purchases to dollar cost average regardless of price fluctuations. Enable dividend reinvestment to automate the compounding process. Fourth, track your yield on cost annually. This metric shows your actual return on original investment as dividends grow over time. Fifth, stay disciplined during market volatility. Focus on long-term wealth building rather than short-term price movements. Remember, SCHD isn't just an investment, it's a comprehensive wealth building system that pays you growing income while building long-term value. The combination of current income, dividend growth, and capital appreciation creates multiple paths to financial independence. Start building your position now and let mathematical compound growth create your financial future. This content is educational and not financial advice. Consult qualified advisors before making investment decisions. Past performance doesn't guarantee future results. Please like, share, and subscribe. Here's to your investing success. Profitable investing.